Hello everybody, Joe Greenspan, First Fidelity Home Mortgage of Wisconsin. Listen, I wanted to just get a little financial tip out to everybody. With all this turmoil and everything going on in the marketplace, people are wondering what's going on and how it is going to impact them. And listen, I have to tell you, right now with all the turmoil and uncertainty, the number one place for, as far as when it comes to buying debt, even though the United States lost its AAA rating, the markets are saying it's the safest and best bet in town. So what that's doing then is the more uncertainty in the stock market, there's a flight out of the stock market, which is considered more risky, into then bonds, which would be treasuries and mortgage-backed securities, which then in turn lower interest rates. So right now, listen, what people are doing right now, people that have refinanced, let me give you an example here. Somebody that refinanced at a 4.5% interest rate on a $200,000 loan amount. Basically, if they turned around and refinanced at, say, 3.875, can you even believe that? 3.875 and actually that would be on a 20-year. Okay, so listen, what they end up doing is paying $155 more a month to go from the 4.5 30-year to the 3.875 20-year. $155 a month. So that in turn means they're paying just over $37,000 more in mortgage payments over that 20 years. But guess what? They wipe out 120 mortgage payments, okay, at the $1,043 a month. So that means their net savings is going to be $125,000, just over $125,000 that they're going to save. So listen, with all this craziness going on, smart money is turning around and taking their 4.5% interest rate. I mean, if there are people out there with even higher interest rates, listen, now is the time. Don't be overpaying on your mortgage. It's the cost of funds on the outstanding balance. Remember that. So, why not turn around and take your 30-year, make it into a 20, make it into a 15, okay? Or, if you want to keep it at 30 and just prepay the principal, you can do that too. Rates are wonderful. You're still talking, you can get a 30-year, below 4.5. So, hey, listen, the other thing is, great time to be looking to buy homes with the, prices being down and with this cost of money being so low. I was working out on a $150,000 loan amount, your payment, principal and interest is $760. Listen, you got to evaluate, is it good to be renting or good to be buying? Down the road, you're going to, people are going to be looking at the silliness and why didn't they take advantage of it? This reminds me actually of back in the day when we had the .com bubble burst and nobody wanted to touch internet stocks, and that's pretty much the mindset that's going on as far as with housing. Listen, you know what? It's the American dream. It will always be the American dream. It's right now necessarily people aren't looking to jump on board, but that's where you want to be one of those people that buy low, sell high. Take advantage of the opportunity. $760 principal and interest, when things eventually do sort themselves out, which they always do, you're going to be laughing all the way to the bank. So, hey, listen, if you have any other questions, give us a call, 1-800-WE-SAY-OK, or 262-650-9890. Listen, I want you guys to have a wonderful weekend. Get out there, start looking at wonderful homes. If it's your kids that maybe it's time for them to buy a home, or maybe you got some extra cash, want to turn around and buy an investment property. Do that. So, hey, thank you very much. Have a wonderful weekend, and we'll talk to you next week.